Welcome back. This is Jeff from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. Ferrous prices remain relatively weak amid ongoing off-peak season conditions in downstream sectors, with only minor changes observed in steel and raw material fundamentals over the past week. However, the futures market witnessed intensified volatility due to multiple macro-level disruptions in particular. The most recent Iran-Israel conflict continued to inject upward momentum into coking coal prices, which in turn bolstered ferrous futures prices. Meanwhile, during the opening ceremony of the 2025 Lujiazui Forum in Shanghai, the People's Bank of China released positive financial support signals, though the absence of concrete policy details limited any material boost to market confidence. Steel market fundamentals remain resilient, with total steel inventories falling for the sixth consecutive week. Supply increased slightly as several production lines resumed operations, largely driven by the continued profitability of steel mills. Nonetheless, consumption for both long steel and flat recovered, which helped to absorb additional supply. In addition, with the negative impact from recent easing rainfall conditions and the National College Entrance Examination period concluding, the week's decline in rebar demand narrowed slightly. Manufacturing sectors, such as home appliances and automobiles, are also entering the demand off-season. Combined with increased HRC cargoes currently in transit, delayed by poor weather conditions earlier, this is likely to weigh on HRC performance in the coming weeks. Integrated mills saw a modest recovery in production as profit margins widened amid recent declines in raw material costs. In contrast, some mini mills reduced production in response to weakening downstream demand and tight scrap availability, exacerbated by sustained high temperatures and the rainy weather. Despite a temporary recovery in hot metal production, raw material prices face broad downward pressure, largely due to weak confidence amid the current off-peak season. A fourth round of coke price cuts was proposed as total coke inventories remain high. While coke inventories at the plants continue to fall, they are still at nearly double the levels seen in the same period last year. In addition, although portside iron ore inventories declined amid higher discharging volumes and decrease in arrivals, spot prices still fell, keeping the iron ore market subdued. Looking ahead, the ongoing off-peak season is expected to continue weighing on the whole ferrous market, in particular for iron ore, as its fundamental outlook remains poor, with major miners expected to maintain high shipment volumes to meet their quarterly or yearly targets, which will likely add pressure to prices. In addition, some steel mills in Tangshan, Hebei, indicated they received notices requiring the implementation of emission reduction measures in late June, which will curb blast furnace production and reduce iron ore demand. However, strong steel export performance and continued mill profitability are expected to offset part of this downside pressure. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.